What's going on, guys? It's GBP baby. Welcome to another backtesting video. Where we've just finished the first week of the year, so I'm going to be backtesting that on the 5 minute. We had non-farm payroll on the Friday, so we're just going to look at how price delivered. So sit back, relax, enjoy. You know how it goes. We're definitely going to be looking at ranges. Wednesday and Thursday were pretty consolidated. Tuesday we had a lot of price action, and then Friday with non-farm payroll we also had a lot of action, of course. So you'll see what I mean by that soon, but let's just look at the Asia range first, as per usual. I'd like to look at the midpoint of that. But yeah, and if you've been watching me, you'll know that I did call non-farm payroll to move higher, and that's exactly what we saw. However, we did move quite a lot more lower than I anticipated. You know, so usually during non-farm payroll, price will go one way and then literally whip back in the other direction. And it did that. However, eventually we started trading higher just as anticipated, but I can imagine a lot of people got absolutely slaughtered by this non-farm payroll. It is the first one of the year, so it's probably one of the most volatile conditions I've actually seen or witnessed. But yeah, so first we're going to look at how, again, we like to use the Asia range as a buffer, and you can see that happening here. But Asia range consolidation, we eventually break out of this consolidation as soon as this candle closes above here, above this high. We expect we run up into this buy side liquidity up here. And then you can see we pull back. There is actually potential for a run up into that liquidity, as in a buy there. So we're going to look at where the entry is. We have a fair value gap here that we come down and trade into. We have another break in structure. Break of structure there, break of structure here. We then return down to this bullish order block. At 3 a.m. we return back down to a bullish order block after already breaking, Asia swing high and finding a level of support. Another thing to note as well, we can look at the 25% level of the Asia range, and you'll see how we come down and trade down into that. So each quarter level of ranges are used as like reference points. Personally, I haven't learned to like master them yet. However, I haven't recognized, and I do tend to recognize how they are used as, swing points, so to speak. And I'll show you exactly what I mean by that. For example, here we come down, touch that 25% level, volume closes above, and then we trade higher. Break a market structure, classic price action. We've got a low, a high, low, low, then we break higher. We do dig quite deep into this. There's another fair value gap here. This is an implied fair value gap. It's not a direct fair value gap, it's just an implied one, and that's because of this wick. But you can see how we trade down into that, and then we have a nice reaction running up, taking out stops and trading into the buy side liquidity. Now, we also, as we're doing this, we reach into this bearish order block here, which is from an intermediate swing high. We don't even reach it, do we? But regardless, this is our Judas swing. So we move up, create the high of the day during London classic price action. We then consolidate right up until about 4:30, where we then start to break lower. So what I'd be looking for at this point as we're breaking lower is I want to see a close below this swing low, because this is the last significant swing low. Yes, we have this swing low as well, but this one actually, well, yeah, this one's more significant. So we can draw that out, and that's when we have our break of structure or shift in market structure. So now we're hunting for sell side. So we know we can, so then at this point we could easily expect price trade into here. Not gonna lie, anticipating this big move lower, I don't think anyone could have anticipated that, especially with it being the first day of the year, so I don't really want to say too much. But one thing to take note of, regardless, we can still analyze and look at how price traded back up into this range. We fill this fair value gap, like so, and then price turns around. We also trade, as we're doing this, we're trading into this wick here. One thing to take note of is this. This is an order block. We've got a low, a high, and then we trade lower. So when you see a wick cross over like this, let me make it red, and then we can look at the midpoint, and you'll see how price respects that almost perfectly, because this technically is an order block. It's hard to explain. I guess this is where the code part of trading comes in. It's also an inversion of fair value gap as well, so we anticipate price to find this level to be resistant. So we can write inversion FVG, because we traded down on the downside, closed it in, and then continued lower. So that's one thing to take note of. Let me just pull it up a little bit more. Beautiful. And then you can see we start running lower. Here we have classic price action: high, low, higher, high, break lower. As soon as this candle closes below this swing low here, we have another break in market structure. So this wick, we could sell into that, assuming we know where we're headed. Now, I didn't know where we were heading. Again, first day of the year, you really can't put too much pressure on yourself. But regardless, we trade back up into this breaker. This is going to be a breaker. So let's just type in breaker there. And why is that a breaker? It's the last down close before the up move that then causes the price to turn around and run away. We've got a nice breakaway gap that forms as we do that as well. This is all just classic price action that I've been, that I always call out when I'm doing my analysis, my back testing. And then we can call that a breakaway gap. Now let's look at how price delivers. So we run lower, this candle, we trade up, and then this candle doesn't even trade. This candle fails, so it's trade back into this net. Anyway, we keep running lower, lower, lower. Again, we have another point of resistance. Let's see, can we see why we are finding resistance at this point? There's all these lows that we're running through. Let's go on the 4 hour first, actually. Let's have a look. I might be able to get us some reference points to look at. So as we're running down, this is the candle we're analyzing right now, right? So we can look at these swing lows and see how price reacts to these different points. So we have this swing low here. I'm going to put sell side. We have this swing low here. And we're just looking at significant swing lows. If you haven't seen my video already, I have a whole video drawing out significant swing lows, being able to identify them. And then when we drop back down to the 1 minute, we should be able to easily see how we respond to these levels. Oh, excuse me. Oh, was we on the 1 minute? We was on the 5 minute. Well, we're on the 1 minute now. Let's go back to the 5 minute. I'm going to stay on the 5 minute purely because I want to actually finish this, and it's hard to do when on the 1 minute. Right, so we trade up into this, we wick up again. Where do we wick to? We wick into this wick, 50% level of that. We can look at that. And being able to recognize these things on low time frames, remember price is fractal. So when you're seeing this, say this was a weekly, if we're learning to anticipate and recognize these things, it's easy. This is how I'm able to call the market so well, because I'm just doing the same thing I'm doing on this time frame, just on high time frames. Anyway, we trade higher, we trade through the fair value gap up to the 50% level, and then we have a large reaction away. So now this fair value gap has been, we've traded through on the upside, downside, upside, and downside again. So we can forget about that. We then have this, we can then anticipate this being a bullish order block. We've got a high, a low, a higher high, and then we break lower, right? So we can look at this swing low here, and you'll see how price again trades into that beautifully. And we have another fair value gap form. So that's what we're going to call a breakaway gap again, or measuring gap. We'll call it a measuring gap because it's already pretty much distributed. And then we can also look at the 50% level of this bullish order block and look at how price treats it. And you'll see how we close. You see how this candle opens, trades above, slightly into this candle, and then continues lower. That's nice price action, that is, because we're respecting that 50% level. We're also breaking structure here. Beautiful to see. and then this candle trades one more time into it, and we start digging lower. We have immediate rebalance here. This is what you call immediate rebalance, so we can sell into this. Why is this an immediate rebalance? This is an immediate rebalance because we trade into the previous candle's low. So that means that this range from this low to this high, this range, this entire range, I'm gonna make it pink. This entire range is now traded through. And you can see, look at the reaction that we have when this candle trades, large expansion, because it's rebalanced correctly. Then eventually we hit another low. Remember, I've just marked out all these lows. We hit another level, slight consolidation, that's fine. Look at how we respect the 50% level of this bearish, this fair value gap again. What's this showing? It's showing a willingness to want to go lower. Yes, we're trading into the fair value gap, but we're not seeing it fill it, which is showing bearishness. Fair value gap again. You can see we're closing, and then eventually we distribute lower. Trade back up. Where do we trade back up into? What wick? We trade back up, down, up into this level. Nice reaction away. We create another breakaway gap. We can call that another breakaway gap. And the reason I'm saying that is because we've taken out this level, so now we're going to the next level. So we need some kind of breakaway gap to form. That's what we get here. If I can spell it right. And then we trade lower again. In terms of entry, if we wanted to enter it again, let's say we had our eyes on this low now and we see this form, we could trade into this sell here and run even lower. Obviously in these environments, like I said though, they're not really ideal for trading, are they? Again, anyway, consequent encroachment, look at that. Look at the respect of that. We trade back up into this bearish order block right here. Multiple times, stabbing it, 1, 2, 3, keep stabbing in it until, again, at that we take out another low. Come back, touch it, trade lower again. We can look at 50% level now of this. Respect that, turns right, and then we're pretty much consolidated until we stab down into that weekly low. Now once we do that, price doesn't go back down there again, and then we pretty much just consolidate our way into the new day. So let's go and look into the Wednesday. Remember, this week started on Tuesday because New Year's Day was on the Monday. So, oh, I didn't even realize. I didn't draw out the New York kill zone. That's from here to here. But you can see we pretty much consolidate all up during all of that purely because of the big move that we had during London. 8:30 bells there. As that 8:30 trades us back into that break fair value gap. What fair value gap? This fair value gap here. It's an implied fair value gap. It is still a fair value gap though, guys. Trade back up into that, and then we have another run down and eventually reach our target. So let's look at this next session, which is, now this is the Wednesday, as you can see. Look at that. This is not, when you have a big expansion day like this, the next day isn't always the best to be trading, in all honesty. This is typical of price to get heavily consolidated. So I'm probably going to skip through most of this, but we can still look at the sessions, highs and lows, and we should be able to visually see and understand how price is chopping its way through it. So let's just drag this out. It's interesting to see how volume is remaining within it. Yes, we're wicking below, but regardless, volume is staying within this range until eventually we trade above it, and then we expand. Now this expansion, we start running out these buy stops that we created here and here. So let's just mark out our kill zones, and we can drag that over like so. Yeah, this would definitely chop people up. Not really much going on. We don't expand until 2 p.m. to be honest, so a little bit weird. I don't really want to say too much. bit of a messy day if you ask me. But again, when you see a lot of choppy price action like this, however, it is showing that price is going to move higher because it's defending these levels. Now, for price to come back down below here after it's done all of this, it's going to be very high resistance because of how much back and forth, back and forth, back and forth, back and forth. They're clearly accumulating here. And at this point as well, Euro was making significant swing lows and dollar was making significant swing highs, but pound was failing to make this low. So they're accumulating the pound knowing that it's going to be stronger. Now, this all gets violated on the day of non-farm payroll, but we'll speak about that. But what I'm saying is that we're clearly defending levels, so we can be confident to be looking for buys on the pound, knowing that, you know, dollar's moving higher and euro's moving lower, but pound's saying nope, I want to go higher. And we see that, you know, on the non-farm payroll, and probably moving into next week, we're definitely going to see much more expansion to the upside. But we'll cross that bridge when we come to it. Let's now move into the next day. So let's see. We do technically have a breaker here, high, low, higher, high. So this is a breaker, right? And it's low resistance liquidity run. So if we wanted to trade on this Thursday, we could do, and I'm going to show you how we would enter or think about entering these. So let's just mark out the high of the Asia range, which is here. Mark out the low of the Asia range, which is here. Mark out the midpoint of the Asia range, which is here. Mark it, and then I'll make that dashed, and then let's just get our other kill zones dragged over as per usual. You'll notice that this backtesting video isn't as, you know, in depth, and that's purely because price action wasn't the cutest this week. Anyway, we can drag the Asian range right the way out through into the new day. Remember, we're going into this day assuming we are bullish. Why? Because Euro's been making lower lows, dollar's made higher highs, pound showing significant strength. We've taken out a significant weekly daily breaker high and weekly low, and we have this big low resistance run to run up. So we're going into this Thursday thinking, okay, we're likely going to want to look at the bearish order block that caused all this, and that's right here. Wow, the breaker low, high, low is actually here, but we can look at this entire range in general, which is actually the Asia range, which is interesting. Excuse me. Right, so let's cut back to business. So yeah, I've dragged out this Asian range, and it's interesting that we trade back into it, isn't it? Something to say not off, but let's get back down and have a little closer look. So we have this Asian range. What's the Asian range? Consolidation. Come back down. Trade into the. Is that breaker? Is that breaker? Is that? Do we touch it? Just about miss it, but regardless, we trade into there. We trade higher. Consolidate at 3 o'clock candle, and then eventually run up, running back into that Asia range. And like I said, this is a breaker range as well, so we can anticipate price to want to turn around at this point. Anyway, so what do we wait for at this point? We wait for a break of market structure. That's what we get here. Break of structure. We trade lower. A nice breakaway gap is formed here. So we don't anticipate price to return back into that. Consolidate slightly in here before pushing through, and you can see we're constantly just stabbing through these levels. So we got this low here, and what I'm going to do is I'm just going to draw attention to these lows just to show how price is attacking them. So we consolidate pretty much right through to the 830, then we run lower, trading back down into the Asian range, and you'll see that we turn around at the exact same point, which is quite interesting, and price respects the bullish order block, which is interesting. The fact that we respect this bullish order block and run higher one more time, failing to trade back into this range, again, it's suggestive, because we had a break in market structure up here, right? So I remember this day. I was anticipating a nice run into these lows. However, we never got it on the Thursday, and that's because they were waiting. They were waiting for the Friday to do the move. So that's interesting to see, to say the least. And then we pretty much just consolidate in this range. We close at equilibrium. Classic price action. Yeah, these are just very consolidated environments, really. I don't really want to say too much. Let's look at this next Asian range for the day. Remember, this day now, this is the day of non-farm payroll. So let's have a look at how price delivered. So we're going to do the exact same thing we've been doing on every other day. You can see price pretty much just falls. There's times when price does just fall straight out of the Asia range, taking out either a high or low just straight away, straight off the bat, and then once it does that, you can anticipate the high to get ran back on later on in the day, and that's what we have happening here. But again, we'll drag it right through. We'll also mark out the midpoint of it, and you will see how price returns back up to that here during London. Again, classic price action. When I say classic price action, I mean like this is typical of price, but you need to study it yourself to see it and recognize it. And I'm not a millionaire yet, so even like it was one thing understanding price action, it's another trading it. So that's a whole nother story. But regardless, we fall right out of bed, fall right out, run lower, retrace as London starts back into the range. We trade and respectively respect. We respect that 50% level, and then eventually we have a nice break in market structure. Where is the break in market structure? Well, we've got a low, a high, low, higher high, and then this close. As soon as this candle closes, I'll be looking at this as the break of structure, so we can put BOS for break of structure. And then you see how this candle trades back up into this fair value gap and breaker. We can sell into that. Look at that respect. Absolutely beautiful price action right there. So let's sell that. Although this is non-farm payroll day, so we shouldn't be really selling anything. And then where would we anticipate price to run to? Well, we could look at optimal trade entry. And again, actually, I'm not going to do that because we shouldn't be really trading. If we are going to sell, I'd probably just get out below this low just because it's a quick scalp. And it's an easy target. And I say it's an easy target because, you know, we have it's created relative equal lows. All of these, like if I drag this out, you'll see relative equal lows. Low, low, low. Price is going to want to attack that, and that's exactly what we see happen. So we can get out of our position just below there on a quick scalp if we were to trade that. Like so. And then price kind of consolidates its way until, of course, we run out this swing high. Take out buy stops, run lower at 8:30, reaching right back down into that weekly low. So all of these people that were potentially long and these relative equal lows, remember there's a lot of sell side liquidity residing below here. There's people that went long on pound that they're going to want to get rid of. Taking out them and then eventually starting to trade higher. As soon as this swing high gets taken out, I'd be looking at looking for entries after this. So as soon as this candle closes above it, any other candle I'd be looking to see trade higher, because this is now going to act as the breaker. So we have a low, we have a high, we have a lower low, and then we've broken higher. So now what I can do is I can drag this out even into the new week, and there's now potential for price to want to trade back into this level. It doesn't mean it's going to, and obviously by the time you're seeing this, it's going to have passed, but I will be talking about this in my weekly review, about where I'm anticipating price to pull back down to in the new week for us to then look for buys to expand higher, because overall we at least this is the expansion that we were waiting for to know, okay, we're going in this direction. Again, we can look at this Asian range. This is the same Asian range from the first day of the year, and look how we've just come back down into it again, consolidating. Very interesting. I find that is very interesting indeed. It seems that's what I mean. The Asian range is so important, and we just keep referring back to it. Look here, we trade back into the Asian range, close above the 50% level and taking out this swing high, which is nice to see. We can enter on this fair value gap if we wanted to, like so, buy that. stop below here, and then we can expect to run up into this swing high, which is what gets taken, which was Tuesday swing high. And then we just retrace off. So that's going to be everything, guys. Thank you for watching. I hope you found this insightful. I might backtest euro on the same day just to see and compare. But you'll see that in the next episode, which will be next week. So thanks for watching, and I'll catch you in the next one. Peace.